Good evening and welcome to your financial news update as we enter the month of October 2024. Here at Dollars and Cents, we want to break down the top economic events that could be affecting your finances right now. From interest rate cuts to a potential strike that could disrupt your holiday shopping, let's get into the details. Let's start with the big headline. On September 21st, the U.S. Federal Reserve made a major move, cutting interest rates by 0.5%. After months of fighting inflation, the Fed is now more concerned about economic slowdown. This shift comes as growth remains sluggish, with the latest GDP growth rate hovering around 1.5%. Recession fears linger, and consumer confidence has taken a hit, with surveys showing a decline in spending intentions. So, what does this mean for you? For homeowners, this could translate to lower monthly mortgage payments, making home buying more accessible. For those looking to finance big purchases like cars, loans could become more affordable. However, if you're relying on savings accounts, be prepared for lower interest returns, which can affect your long-term financial growth. The Fed's actions are part of a broader strategy to stimulate the economy, but this delicate balancing act raises questions. Will this be enough to kickstart growth? And how will it affect inflation moving forward? Oil markets are facing a major downturn, and this is something we all feel at the gas pump and beyond. Brent crude oil prices dropped to their lowest since 2021, hitting around $70 per barrel. The primary driver of this decline is China's economic slowdown, which has led to a sharp decline in global oil demand, with estimates suggesting a decrease of up to 2 million barrels per day. For drivers, this could mean cheaper gas, with prices at the pump potentially dropping below $3 in some areas. However, while lower oil prices might sound great for consumers, it's also a warning sign that global trade, particularly from China, is weaker than expected. Moreover, falling oil prices can lead to challenges for oil-producing countries and states, which may experience budget deficits as revenue declines. This could, in turn, lead to economic slowdowns in those regions, impacting jobs and public services. So, while we enjoy lower gas prices, keep an eye on the broader economic implications. Speaking of China, their economic slowdown is sending shockwaves through the global economy. From shrinking exports to ongoing problems in their real estate sector, which is facing a crisis with several high-profile developers defaulting on debt, the world's second-largest economy is struggling. Recent reports indicate that China's GDP growth rate has dropped to around 3%, far below the pre-pandemic levels of 6% or higher. This is affecting everything from the price of goods to the demand for raw materials. For us, that means potential delays in products and higher costs for manufacturers who rely on Chinese imports. In fact, some estimates suggest that U.S. businesses could see costs increase by up to 15% for certain consumer goods if this trend continues. This slowdown could hit your wallet if you're buying goods that are manufactured or sourced from China. It also raises concerns about global supply chains, which may still be recovering from the disruptions of the pandemic. Another critical issue making headlines is the rising global debt, which has reached unprecedented levels. According to the International Monetary Fund, global debt hit over $300 trillion in 2024, making up more than 350% of global GDP. What's driving this? Governments worldwide have borrowed heavily during the pandemic, and many are now struggling to manage the costs of servicing that debt, especially with rising interest rates. For advanced economies like the US and the European Union, this means that governments are facing difficult choices, either cut spending on critical services like healthcare and infrastructure, or raise taxes, which could slow down growth. Meanwhile, developing countries are in an even worse situation. Countries like Sri Lanka and Argentina are teetering on the edge of default, facing the possibility of economic collapse due to unsustainable borrowing. So why should you care? High global debt not only puts pressure on governments to implement austerity measures, but it can also lead to higher taxes, reduced social services, and in extreme cases, economic instability. This could affect everything from job opportunities to the availability of public programs. So, if governments are forced to make cuts, or if interest rates continue to rise, it may have direct effects on your day-to-day life. Finally, an important event that could impact everything from holiday shopping to food prices, the looming dockworkers strike. Around 45,000 workers on the East and Gulf coasts are prepared to walk off the job on October 1st. These ports handle nearly half of all U.S. imports, and if the strike happens, it could mean major delays for shipments, including consumer goods and agricultural products. Experts warn that a prolonged strike could lead to a backlog at ports, similar to what we saw during the pandemic, which could push up prices for consumers and disrupt holiday shopping. Businesses are trying to prepare, with some retailers already ramping up inventory in anticipation of potential shortages. If the strike lasts more than a few days, it could lead to higher prices and empty shelves. So if you've got holiday shopping plans, it might be a good idea to get a head start now. Keep an eye on this situation, as it could directly affect what you find on the shelves come December. These are just some of the critical financial events happening right now that could affect all of us. Whether it's interest rate cuts, lower oil prices, or supply chain disruptions, it's important to stay informed so you can make smart decisions with your money. Be sure to subscribe for more updates and let us know in the comments how these events are impacting your personal finances. Thanks for watching, and stay tuned for more financial insights.
I bet you didn't know managing money could be this easy. Subscribe now and get the latest finance tips and tricks straight to your feed. From saving smarter to investing better, we've got you covered. Don't miss out. Hit that subscribe button today.